While everyone's focused on plummeting prices and emergency trading halts, something about Trump's tariff math have raised eyebrows among experts. Not a market rumor, not a political leak, but a realization. Could a ChatGPT-style AI prompt be behind America's new trade rules? I'm not making this up. Veteran traders, macro experts, and even AI engineers are all circling this theory. Because this tariff math is so simple that you could recreate it with a single line of prompt. And that's not even the most dangerous part. Watch this till the end to know. April 2nd, Trump announces a new 10% baseline tariff across the board, with China getting hit even harder. Within minutes, Bitcoin dropped over $5,000. Equities hit their highest trading volumes ever. Gold liquidated, and pot shops, many have rumors of total blow-ups. This wasn't just a tariff announcement. It forced massive selling, degrossing, and a system-wide exhale. Now the question is, where is the smart money piling up? They are watching the carnage and quietly loading up on discounted assets. Why? Because when correlations goes to 1, it's often not logic, but liquidation. And if you are quick, that's your opportunity to get in. This is where things get interesting, because Trump's tariff formula is surprisingly simple. Deficit divided by US imports is recommended tariff, with a 10% floor. You know where else this formula is appearing? ChatGPT, Claude, Grok, and Gemini. When prompted about tariff calculations, every AI model is giving the same answer. So now the question is not if this is a good policy. It's, did a prompt just shape US foreign trades? Even macro experts are calling this logic childlike. And that's the point. If the logic is too simple, markets don't just debate, they pray. It's 2025 and we are not dealing with a simple static systems anymore, but systems that feed into each other. Here's how it works together in a simple way. Politicians speak, AI scrapers digest, quant funds react, and prices collapse. Traders are no longer waiting for confirmation. They are reading signals in real time, and most of those are increasingly interpreted by machines. So when Trump said reciprocal tariffs, every language processing model flagged it as protectionism, contraction, and sell risk, triggering a massive market sell-off, and it happened. The theory going around now suggests this is Trump's Queen's real estate strategy. First, shock the entire system, then cut bilateral deals, and maybe even form a new trade organization without China. And Japan talks have already started, with Scott Bessent leading them. Behind the scene, there's a talk of allies paying more for US protection, but even if that's a plan, the pain is already priced in. Supply chains are being redirected, new investments have halted, and portfolios have taken a serious hit. And that's where the Bitcoin re-enters the picture. It may surprise you, but this chaos might actually be bullish for crypto. And a lot of traders are coming to the same conclusion. Why? Because in a fragmented, deglobalizing world, Bitcoin serves as a bridge between economies. It's becoming a reserve asset and a neutral zone in the world of economic warfare. If the US reduces the money supply while other countries increases their to handle tariff impacts, Bitcoin stands the benefit. Sovereigns and funds might not be saying this publicly, but they are watching it. And the smart ones already positioning. So if you are in this space right now, here's what matters. Watch treasury flows and FX swaps. Monitor geopolitical language because AI systems read it before you do. Track ETF inflows on down days, and don't focus too much on headlines. Follow liquidity, because you are not trading assets anymore. You are trading signals, prompt, and interpretations. Trump's press conference was not a speech. It was a stress test for the entire market, and the system cracked. So if someone is telling you AI isn't running things yet, just say, show me the prompt. If this shifted how you think, hit subscribe and drop a comment.